Hey, today I'm going to talk to you about the biggest mistakes that I see bookkeepers make when they're first starting out and how you can avoid them. My name is Morgan from FinePoints.biz and I love helping you guys get organized. Today's video is a collaboration with my friend Jess. I'm going to tell you all about her right after I tell you the first mistake that I see bookkeepers make. All right, so the first thing is not using the undeposited funds section correctly. And this one came to mind right away because it's near and dear to my heart, because one of my very first clients had a terribly disorganized books, and it was in large part because of the undeposited funds and because they didn't know how to use that. So kind of in a nutshell, how that works is if you have a client who has multiple checks, like from their clients or however they're making their income. So say one day they get 3 checks and they get some cash and they put all of that together into one bank deposit. You may be recording the deposits from invoices, so you can see, I got a check for $100, I got a check for $850 and some other amount. But in the bank, the only number that's going to show up is the total. So QuickBooks has a way to do that where you can check off the ones that are the smaller amounts that are within a larger amount of the bank deposit. What had happened with that client is they had kind of halfway used the process. They had used the undeposited funds bucket and a bunch of stuff was going in there, but then it was never coming out of there and they were recording their deposits separately. So it was kind of like it looked like they were getting the income twice and it was going into undeposited funds and then it was also coming in through the bank feeds. So just make sure you have a pretty good grasp on how to use undeposited funds if that is something that your business or your client requires. All right, so I'm talking about the 6 mistakes that I see bookkeepers make, and Jess is going to talk about 6 mistakes that she sees in the financial coaching world that she's in. She has an awesome YouTube channel. She's just getting started, but she's already totally rocking it. And she's also a bookkeeper, but really her main goals for her channel are to help people get out of debt and then also help them build their financial coaching businesses. So definitely go over to her channel, subscribe to both of our channels, let her know that I sent you. All right, the second mistake I see is people not reconciling their bank accounts. And I do understand the logic of some people say that, especially in QuickBooks Online, everything is feeding from your bank account. So you should theoretically have every single thing automatically matching the bank account. So why do you need to go to the extra step of reconciling? And basically what I've come to decide is that it's just an industry standard and you just need to do it. And it does help. Sometimes I do find errors. It's just that official check to make sure that everything is lining up exactly. When you send the books to the accountant to do taxes, they're going to want to see everything is reconciled. And the more and more complex clients you work with, their businesses might get more complicated with different accounts or liabilities and credit cards and all these different working parts. So if you just have that check at the end of the month, yes, it's reconciled. Yes, it matches my statement. I kind of just think of it as like checking the last thing off my to-do list. Bam, everything's done and closed out and good to go. All right, number 3 is using cash incorrectly. So Jess is gonna go into this a little bit more in budgeting and if you should use envelope system and cash or if you should use debit card and more digital options. But in your small business, I definitely recommend using some kind of card, a debit card or a credit card, because that makes it like 10 times easier to track what you're spending. So if you use your business debit card at Target, it's gonna feed into QuickBooks Online. It's gonna have the date, the amount, and the vendor all in there without you having to do any extra work or tracking. If you do happen to use cash occasionally, make sure you as a bookkeeper record it correctly based on what was purchased for the business. And some businesses do want to have a petty cash account, so they want to have a little bit of spending money maybe in the office if someone grabs coffee or something, or employees who don't have debit cards. So there is a specific way to deal with petty cash funds. I think usually you create a bank account in QuickBooks and have all the money coming in and out there so you can really track how much cash is coming in and out of your business. All right, the 4th mistake is recording transfers as income. So anytime you're transferring money in and out of different bank accounts. So it could look a couple different ways. The most simple way would be you're transferring money from your checking account to your savings account. So that is going to look as an addition to your savings account, but it's not actually money that is income that came from a client. You're just moving it from one place to the other. So you want to make sure that you don't just match it in QuickBooks and make it look like income, but make sure you actually record it as a transfer. And the majority of the time, QuickBooks does figure that out, and they can see that it's in both of your accounts and it should be a transfer. But you as a bookkeeper need to make sure you are tracking that and paying attention. It does get a little bit more complicated if you have money coming in from accounts that are outside of the business accounts that you have set up in QuickBooks. So for example, I had a client who closed out an old account and they had some, they had like $5,000 in there in income that they wanted to put in their current bank account, but I had to make sure that it was being transferred because it had already been recorded as income like a long time ago. So I needed to make sure it wasn't being seen as new income, because then of course you are overstating your income and you're paying taxes on it again. Same thing if you're putting in money from your personal bank account, you need to record that as equity, not as income that is coming into the business. All right, and number 5 in a somewhat similar vein is misreporting your owner's draws, your owner's salary. So I actually have a whole video that goes into this in a little bit more detail, but it depends on what type of business structure you are and how you're paying yourself. If you're paying yourself as a salaried employee, or if you're paying yourself as an owner and getting distributions or owner's draws. So in most, like my business, I am a single member LLC and I get owner's draws. So that when I take it out is not an expense for my business, it is an equity account. So equity is always anything that's coming to or from the owner. That's a simple way to think about it. Just make sure when you're paying yourself that you do the research and figure out exactly what you need to be doing so that you're not misrepresenting your income. All right, and the last mistake I see a lot of businesses making, or a lot of bookkeepers, is just having really disorganized systems for document tracking or receipt tracking. So there are a million different options of how you can do this, and you just need to kind of fine tune it to your own preferences as a bookkeeper, and then also how the client's business works and what they're willing to do and what they're willing to give you. I personally like to do a lot of it digitally as much as possible. So for my client, depending on their size, I like it when they can email receipts to a QuickBooks address that's already set up in my QuickBooks Online account, and then those receipts will just show up automatically in my QuickBooks account and they will match to the transaction. So if they bought something at Michael's and I record that expense, then QuickBooks can usually find the receipt that was sent and match it together. So that's one example of how to deal with documents and deal with receipts. I have another video called Paperless Bookkeeper where I talk about how I really don't keep any paper for clients anymore. I try to do everything digitally. So I am very well known for setting up Google Drive spreadsheets. If someone needs to record, tell me what they spent money on, or if they need to tell me what their income, where it came from, if I need to categorize it a certain way. So as a bookkeeper, don't be afraid to, be kind of bold and talk to your clients about their systems and suggest things that might work better for them, because they are actually going to really appreciate that. All right, don't forget to check out Financial Coach Jess, her channel. I know you guys are going to love it. She also did a review on Bookkeeper Launch, which I have a video on that as well, so you can check out hers and kind of see her pros and cons to that program. That's actually how I first found her, because we were both doing Bookkeeper Launch. Thank you guys so much. A thumbs up helps my channel out so much. And don't forget to hit the red subscribe button down below. Take care. Bye.